I just want to get straight into it. So it seems, at least for the last fiscal year, mass market did enough to offset that drop in VIP. Do you expect that dynamic to pick up further momentum in this current fiscal year?
Well, look, historically, mass market domestic business has made up about 70% of our business. We see that as the core for us. And so as we think of our strategy, we really want to enshrine that part of the business and continue to grow that fast. The opportunities for us in the international side are really in the mass market, in the premium mass segment, more so than anywhere else. We think that that's our sweet spot because we can combine the gaming experience with the tourist experience.
Have you given up on VIPs?
No, I haven't given up on VIPs. I just recognize that, you know, if you're living in Asia and all you want to do is gamble, there's many other destinations. And yes, we will get a fair share of that, but it's not really a part of the business that we can control through a unique value proposition. But if you look over my shoulder and look over look at Sydney Harbour, the bridge, the facilities, the climate, we can offer something that's quite unique for those people that want to seek something special, and that's what we want to build on.
And in 4 years' time, if I do look over your shoulder, you'll not be the only player in town. Your competitor Crown's set to open up their own version of a six-star resort and casino there as well. Talk to us, how has that changed your projections, if any? Because I understand currently you're currently putting through a 1 billion Aussie dollar upgrade to your current facilities there. Has that moved back your target, I guess, break-even point for that?
Look, we have 3 properties, and that's probably the first thing to remember. Our properties are all along the east coast of Australia, and we are in an enviable position in terms of what we can offer in those locations. So, you know, first part of our value proposition is that Sydney is important, and it is the premier VIP destination today in Australia. But, you know, there's other destinations that we can take customers to. In terms of our investments, the $1 billion that you referenced, the focus of that really is on the domestic high-end customer. You know, that's a segment that we have not invested in sufficiently in Sydney, and, you know, it is something that we can do a whole lot better, I think. And if you look at what we're building out, we're doubling the food and beverage, we're trying to build another hotel. You know, we have enough capacity. If it was purely the VIP we'd go after, we'd have enough capacity for that. But I see a much bigger opportunity for us in the domestic high-end segment and the tourism segment.
Talk to us about CapEx. I know that's a moving target for you. You mentioned some of the projects up and running. I believe you have one coming up that you're building over in Brisbane. Have you secured all the financing for that? Are you planning to raise more money?
Yeah, look, we haven't raised any money for a little while. We are looking to fund all of our capital investments really through existing facilities and cash flows. So if I can take you through the investments we've planned, you referenced $1 billion that we hope to invest in Sydney over the next 5 years. In the Gold Coast, we've got an investment underway that will take about $800 million. We're some way through that. That involves expansion of gaming, 2 additional hotels. Part of that investment is with our partners, Chatafuk and Far East Consortium out of Hong Kong. And then the big development is in Brisbane, Queen's Wharf. That's a $2 billion plus investment in an integrated resort. We're doing that together with Chatafuk and Far East. We're still looking to raise debt capital for that, which will be project specific. But from an equity point of view, we have a payout ratio of about 50%. And because we're very cash generative now, that allows us to fund the equity that we need to inject. And I see you playing our Queen's Wharf pictures in the background. It's a fantastic development.
All right, so we're looking at these pictures. How much is that going to cost? What's the ballpark figure?
It's about 2 billion Australian dollars.
All right. Now, I once talked to another gaming executive, and he essentially told me what you just told me a few minutes back, which is that the domestic market is what keeps him sleeping well at night. Tourist flow is a bonus. What's the breakdown you see, say 5 years from now, in terms of domestic tourism within Australia and the international tourists coming in?
Yeah. So if you look at our business today, 60% of our revenue is purely from customers within a 40-kilometer catchment area around each one of our properties. So it's purely local, 60%. 10% is interstate and international tourists. So these are people that are in the city for other reasons and happen to wander into our properties. And then 30% is international VIPs. As we look into the future, I don't think the mix is going to change that much. I expect each one of those lines of business to grow. If anything, that international tourist segment, I expect that to grow faster than anything else.
So help flesh this out for us, and I guess from an overall marketing perspective of Australia. So if I'm, say, in China, whichever city in China, why should I take a 9-hour flight down there and not just, say, hop on to places like Japan, which could potentially be one of the competing places? We already have capacity in the likes of Singapore, the Philippines, and Vietnam. Why do I take that long-haul flight down there where I can get the same thing, do the same thing near?
Look, you're asking a very relevant question, and that has really shaped the way we're trying to position ourselves in the market. If it's purely about gaming, our private gaming rooms are as good as anything you'll find anywhere in the world, except we have more beautiful views with the harbour bridge in the background and so on. But if it's purely about gaming, it's quite hard to differentiate yourself. The customer that we think is we should go after is a customer who wants to do something more, and that's where the locations of our properties is relevant. You take Sydney or the Gold Coast, we have subtropical climate. We've done all the research into understanding what our customers are looking for, and a lot of them are looking for entertainment, they're looking for tourism experiences, great food, they want to get out onto the harbour, play golf. We can curate all of that for them to have an unbelievable experience. Gaming is part of that, but we can package that up like I hope nobody else.
So Matt, what's the vision then? What's the breakdown, gaming and non-gaming? Where do you see this? Where do you see the pie?
Look, 5 years ago, our gaming business was about 95% of revenues. Today, we are just in the high 80s. In 5 years' time, we have articulated a vision of wanting to operate the best integrated resorts in Australia. That means that gaming will still be the dominant part of our business, but we'll probably be in the 70% range.